And concluding this chapter of this sub-chapter of today's program will be Dr. Matthias Hirtschulz from dfine, and he will speak on crypto asset-based business models. Enjoy.
Thank you. I hope you can hear me. Maybe someone can give me a signal.
We can hear you well.
Welcome, everybody, to my talk about crypto asset-based business models from custody to crypto funds. So really, the focus of my talk will be about Bitcoin, cryptocurrencies, and other crypto assets, and it will be on respective crypto funds. And I will also touch a little bit on the custody side. Quickly about dfine, my company. dfine is a European consultancy, really with a focus on the financial services industry with over 1,000 employees. Which makes us really special is that we are over 90% physicists and mathematicians and computer scientists. And with that background, we are really hands-on implementing solutions for our clients. Myself, I'm heading the blockchain and digital asset practice, and that's also how we are working in the blockchain and digital asset space. So we are supporting our clients really from the conceptual design of a new use case, from the business case to actually programming it, building it, and finally shipping it, bringing it to production. We have organized our offering in 3 areas. The first one is around platform solutions. So for example, we have been supporting a bank in building a digital asset platform based on permissioned blockchains. We're currently supporting a client on a pay-per-use use case. So these use cases are mostly around permissioned blockchains, bringing together the stakeholders of the use case and bringing together the ecosystem. And then the second and third pillar is about digital assets, where we're really supporting the new market infrastructure for digital assets and also for crypto assets, from the custody of digital assets to AML solutions to primary market platforms. And finally, also how these assets come to life through the process of tokenization. And I think for asset managers, for banks and other financial institutions, there are really a lot of opportunities. We think that we won't live in a fully decentralized world in the future. There's a lot of things that can be started also today, and some of the use cases I will talk now. So when we're talking about crypto assets, Bitcoin and others, we see that there is a strong change of perspective about these assets. You may have heard in 2017 that Jamie Dimon said that Bitcoin is a fraud. Already in October last year, JP Morgan sees a great future for Bitcoin and published an analyst report about it, comparing Bitcoin to gold and predicting a long-term upside for this asset. And just recently, JP Morgan communicated that they plan to offer a Bitcoin fund for their wealthy clients. But it's not only JP Morgan, it's also other players in the space like BlackRock. The CIO of BlackRock, Rick Rieder, said in an interview in November that he actually thinks that Bitcoin is here to stay, and even says that he thinks that it will replace gold to a large extent. So this is pretty remarkable, and we are also, I'm based in Germany. We are seeing in the German market, there's a lot of movement happening. There's also legislative changes that are happening. For example, it will be allowed for in certain type of special funds to invest up to 20% of crypto assets. So there's hundreds of billions of market size of opportunity here. And that's why I think it's really now moving forward and a good time to start initiatives. We're not only seeing this from this side, but also from the investor side. Just wanted to show you a recent investment report from Grayscale, one of the, I think, even the largest asset manager for crypto assets, that really they saw a huge increase in inflow in 2020. And these are in the diagram, you see the actual inflow. So this is not driven by the market prices. But also you see that they already manage around $20 billion of assets under management. And the most obvious thing from a asset manager perspective is to really start a fund for these kind of crypto assets. And in Germany, at least, it's currently possible as a so-called open or closed-ended special alternative investment fund, which is really targeting professional and semi-professional investors. And you could think about in a fund that really focuses maybe on a selected number of blue chip crypto assets. And the rationale behind such a product or the USP of such a product would be to abstract the complexities from the investor, to allow them to have a secure access to the asset class, and also help them with the selection of promising and high quality assets. So this is the opportunity for asset managers currently in the German market, at least, and also for investment management institutions that want to provide the respective infrastructure that's necessary. So let's look at the market infrastructure that's needed for trading and for setting up crypto funds. We have really separated the infrastructure in 4 layers. On the bottom, you have the settlement layer, consisting here of mainly the open blockchains. We're not talking about permissioned blockchains in this case of cryptocurrencies or crypto assets. And it could be either the native crypto assets like Bitcoin or Ethereum. It could also be tokens, utility tokens that are represented on respective blockchains. And above that, there's we call it the access layer, really the custody part that directly interacts with the assets. And in Germany, we have the so-called crypto custody license. Financial services license is required for this, so it's enacted in the German Banking Act. And for certain types of funds, at least according starting with a certain value of assets under management, you need also a depository that fulfills certain control functions. That's also necessary. It's not new with regards to a licensing perspective, but new to the required processes for such kind of function for crypto assets. And then finally, we have the service layer, really where you have, on the one hand, the trading side, be it crypto exchanges, brokers, or OTC desks. And on the right-hand side, you see the crypto investment management institutions or asset managers, really that also need to implement their respective IT systems and processes to trade these assets and to manage a respective portfolio of crypto assets. Let's look first at some of the challenges that are related to the trading in crypto assets, or the top left corner. Here you see that the liquidity in the crypto market is pretty fractionalized. We are seeing hundreds of different trading venues worldwide, and to ensure best execution for the clients, it's good to be connected to several of these liquidity venues, being it direct connection to the exchanges, direct market access, or via OTC desks or brokers. And this already brings us to the second important point, which is with regards to the connectivity to these liquidity venues. And especially with the exchanges, we see a lack of standards. Some of them have also implemented fixed interfaces. Then we see some partly not very reliable interfaces. So you need to be able to deal with interruptions in the connections. You have to have a proper error handling. And this leads to that it's pretty costly to implement it yourself and to implement the right processes. But there are also software providers that exactly have implemented such functionality that again abstracts this complexity of the crypto markets. And third, there is the third challenge is around funding. So to be able to place orders and execute trades on exchanges, usually it's required pre-trade to do a pre-funding, either in cash or crypto. And this also means that you need to wait a certain number of block confirmations until you will be able to trade. So that's why you will need some kind of cash or crypto, let's say treasury, that manages this liquidity and executes or assigns the right blockchain transactions to provide the liquidity. There's also other possibilities that are currently being developed, which is around via trading via off-exchange custody, such that the assets can be held in a separate custody away from the exchange and still be available for trading immediately. And finally, the fourth point is around counterparty risk. So you will need to assess the counterparty risk of the different liquidity providers and then issue again transactions that make sure that these limits are not fully drawn, and you move your assets into a separate custody solution. So this is another reason why you need this cash and crypto treasury functionality. Now, after having looked at the trading part, let's also look at the custody part. And as you see in this market infrastructure for crypto assets, you see that the custody is at a central point in this infrastructure where you store the private keys on the one hand, but you also have the direct connection to the assets, and the custody solution needs to be able not only to sign blockchain transactions, but also expose certain functionality of the assets to the service layer and the users of the assets. And that's why custody becomes so important. At the core, we have the safekeeping of the private keys that control the assets, but at the same time, the more complex the assets will get, the more functionalities you will have. For example, with regards to certain asset properties, votings, cash flows. You might have retrieval of metadata from NFTs, so-called non-fungible tokens. So these are asset properties a custody solution then needs to support. Then the second area is around, we call it blockchain servicing. So really blockchain specific functionality you might not know from classical financial markets. So for example, staking the asset hard forks, airdrops. These are blockchain-specific effects that need to be catered for. And it also allows an immediate customer benefit. For example, if I can increase the fund performance by staking the assets. So this really becomes also then visible to the investors, kind of functionality I have on the custody level. And finally, there's functionalities around prime brokerage. I was talking about already the trading aspect, for example, the fast off-exchange custody, to be able to trade immediately, or to be able to participate in DeFi protocols, for example, lending protocols with the assets. And really from the trading infrastructure, from the custody infrastructure, some infrastructure for a crypto fund emerges really. Again, here you see that there is the settlement layer with the different blockchains, and the exchanges, the trading venues, and the custodians. Really, they are the parties that directly connect to this layer. And so if you're implementing such a solution, you can use these providers. You can use a licensed custodian if you don't want to do it yourself. You can use the exchanges or brokers that connect then to the blockchains. And as a investment management institution, asset manager, you might want to have an order management system that specifically caters for the challenges I mentioned with regards to crypto trading. You will need to have some functionality with regards to the liquidity management. And then you will need to integrate the whole thing with your existing systems, like a portfolio management system, like your back office systems, fund administration systems, or an NF calculation. Finally, I think really the time is right to seize these opportunities. We have seen that there's a lot happening on the regulatory side. You can implement this in a compliant manner. You can work with regulated parties. The service offerings are there. We have seen that software is there, that the custody providers are there, the respective execution, the order management systems are there. And finally, we see the rising demand on the investor side. So I think it's really a good time to start an initiative and look into this area. And obviously, if you're interested to discuss this in more detail, please do not hesitate to contact me, and we can set up a quick call. Thanks very much, and enjoy the conference.
Thank you very much, Dr. Hirtschulz. We have a few questions, if you're still open to that.
Sure.
Okay, great. Thank you. First off, the audience wanted to know, how is a good liquidity provider different from a bad one? What does it take to stay?
So the liquidity providers, they have they cover pretty different market segments. So from you have the exchanges, you have brokers, you have the OTC desks. Let's say, for example, let's look at the exchanges. It's really important that you have enough depth and liquidity in the respective order books, that you have less slippage. But on the other hand, you still might want to have that order management system that spreads your order across different marketplaces. For brokers, it might be a good USP to have a competitive pricing, to have a stable technical infrastructure, and themselves have the capabilities of themselves having a good direct market access. So this could be two examples.
Okay, great. And Another question from the audience would be, how does dfine evaluate crypto funds management within the EU? Do you have experience in the EU area in that regard, or what's your general impression?
So again, as I said, I think the market is moving forward. We see the legislative proposals, be it on the German side, on the so-called Fondsstandortgesetz, where it was possible to have these special funds to invest up to 20%. We see the European regulation coming up with regards to crypto assets that will further help the system. So I think this is it's a good moment for this space.
Thank you again, Dr. Matthias Hirtschulz. We will have